sharing your screen.
Oh, got it. Stopped.
Perfect.
There you are.
Amazing. Well, good morning, everyone. Super excited to be here today to talk about all things data room. As Katie mentioned, some of you might have seen me at the kickoff event, and I am a SheBoot alumni as well. So it's always nice to come back and share different insights. It's one of the most helpful programs out there in terms of all the accelerators and incubators that I've done. So really excited to be here and to connect with all of you. I do really want to make this interactive. So throughout the whole presentation, make sure you put things in the chat. I'm going to stop for discussion. So make sure you keep all those questions top of mind when we stop and pause for all those discussions. I know in the poll, it seemed that everyone at least had some type of data room. So it didn't seem like anyone didn't have anything. Some people said they have partial and they felt a bit uncomfortable. Some have partial, they do feel comfortable, and some just need to update there. So hopefully, depending what stage you're at in your journey, this will still help you in terms of lessons learned. And we're going to dive a lot more into overall data room management. So a little bit about me. I am a facilitator and coach with Volition. I'm also an entrepreneur myself. So I'm a co-founder and CEO of Marlow, which is a period care brand that's created the first lubricated tampon. I went to the Ivy Business School at Western, and I love to give back to that community. So I'm actually an entrepreneur in residence there for many of the students. I'm going to go back there this weekend, which I'm excited about. And to date, I've raised 1.2 million in funding over 2 rounds and 700K in non-dilutive funding. And I put my LinkedIn there in case any of you want to follow up afterwards and connect. Would love to connect with many of you. So in today's session, we're going to be focused on a couple of different elements. The first is looking at the overview of data room. And I know you have already covered a bit of that in SheBoot. So we're going to hopefully make sure that it's not repetitive of anything that you've already covered. But we do just want to remind you a bit of the overview and some of the essential documents that are needed to be in your data room. We're then going to dive into my experience building mine and specifically focus on some lessons learned and things I would have done differently now going through 2 rounds, how I would kind of change it moving forward for future rounds, and hopefully encourage a lot of discussion during that part to see any challenges you've faced while building yours as well. And then we're going to go into aiming for good enough. So I know a lot of times it's hard to know what should be in the data room. You feel like you have to have everything perfect before you send to an investor, but we're really going to go about aiming for good enough. And, it doesn't have to be perfect, but if you have that structure there and you continuously update your documents, what does that kind of look like as you go about your fundraising process? And then throughout the whole session, we're also going to be going through the data room action plan, which was shared with you. So make sure that you have that available because we're going to dive into that in certain parts of the session as well. So in terms of the resources that are available for you, as we mentioned, there's a data room action plan, and that essentially goes through every single document that should be in the data room, and it allows you to mark if that document is started, in progress, complete, or needs updating, or maybe it's also not applicable to you. Sometimes, depending on your business, you might not need some of the things that are on that action plan, but it does go over a whole list of some of the key documents that should be in there. There's also a really amazing post from Julia in Circle that talks about some key resources around data rooms. So make sure you check out that post. And then also in your summer session, if you start around 20 minutes, there's some information there. And of course, the SheBoot coaches and advisors are available for you as well as the sample template and tracking Excel that you're going to be able to access through all of your resources as well. So these slides will be shared with you afterwards if you want to reference back to any of these resources, but we thought we'd remind you of some of the resources that are available for you when it comes to data room already. And we covered the poll. So okay, so now going into what investors are actually looking for when it comes to the data room. So I know we were talking about how it doesn't have to be perfect, but what is the goal that investors are looking for when they are accessing your data room? By this point in time, when you're meeting an investor, they've probably already had a couple of calls with you. You maybe had that initial discovery meeting, you had a pitch session, and now you're getting more into that due diligence and you send over your deal room. The main thing with this is they're really looking for organization and attention to detail. So they want to see that there's a clear table of contents. It links out to any of the documents that they need to be accessing, and it's easy to navigate. So, making sure that it's really easily labeled, everything follows a similar naming convention. They want to see that, you're able to execute and you're able to be organized when it comes to all your documents. So that's, I think, the bare minimum of what investors are looking for right away is this deal room organized and is it easy to navigate? Then they're going to go into making sure that they're able to access all of your financials, all of your metrics, and other key information. So this is the chance for them to dive deeper into your business, making sure they can have access to like your IP, your shareholders documents, all of this key information. They want to be able to access that in the data room all in one place so that they're not asking you a million questions and keep following back and forth over email. So try to have as much of the items that are requested on that data room action plan available for them in one spot that they can go to. They also want to be able to answer key questions that are coming up. So looking at your metrics over time, your projections, what can this business get to, making sure that some of those key questions that they're looking for, they have access to that. And then also the responsiveness and the thought process of the founder. So, projections at the end of the day, a lot of it has assumptions. It might not be perfect, but if you can clearly explain how you got to your projections, how you got to your revenue forecasts, and it makes sense, and they can see that there's not a big gap in the logic and the way you came to your projections, that's more so what they're looking for rather than it being perfect. And so I think whatever you do put in the data room, you want to make sure that you're able to explain it and you're able to actually understand all the assumptions going into everything so that if those key questions come up, you're able to showcase how you thought about putting those documents together.
And can I just pause you a little bit, Nadia? And it looks like there might be a couple of questions. Was somebody gonna? Okay. If not, I'll chat. I do think and totally reinforce what Nadia is saying. In terms of your checklist, saying that something's in progress is better than nothing at all, right? And making sure that the investors are aware that you're aware it's not a final version. We especially at these early stages, the expectation is low, but this is a huge learning process of where you need to be for your Series A. That will take you to a new level of data room and documentation. So that's one of the reasons why we put a stress on the data rooms and making sure it's they're working for you and working for the investor.
Mm-hmm. Sorry. No, I like that point because like you said, it might not be perfect, but if you have all that information and you show the investor that you're thinking about it, it's better to show that you already have thought about it than for them to ask you, oh, what about this? Where is this? And then now it shows that maybe you haven't thought about it. So making sure that those things are in progress.
Yeah, good, great.
For anyone else on the call, I'll pause here. I know some in the poll have said they've put together an initial data room structure and maybe have already gone about raising some early stage funding. Is there anything you would add to this list about what investors might be looking for in your experience that maybe we haven't talked about yet that you want to share with the group?
Lynn's got her hand up, don't you? Lynn, is that?
Okay, go ahead. Sorry, I couldn't see.
Did you put your hand up, Lynn? I thought you did, but you didn't. Okay, no, okay.
Okay, I'll keep going, but if something comes up, then feel free to jump in. So when it comes to the essential documents, and again, this is covered on the checklist as well, some of the key documents that will have to be in the data room include an executive summary. And a lot of the information in here is kind of a one-stop shop if people want to know who are the competitors, a summary of the product, all of that key information in 1 to 2 pages. And I find in my experience, investors will pull a lot of information from that for their deal memo as well. So if you've already been able to summarize some of that key information, it really helps them when they're putting together information to review internally with their teams. So I would say that's definitely a very important document to have in the data room. The pitch deck, of course, you've probably already shared it with the investor by the point that you get to the data room, but having a copy of it in the room so that if they need to share it with other members of their team or they want to take a look again, it's just good to have it all in one spot with your other key documents. Financials, 3 to 5 years, making sure that you have your sales forecast, that you have unit economics, you have, G&A and how this is going to change over time. Again, it might not be perfect, but if you're able to show the best assumptions on revenue growth, on how maybe your unit costs will come down over time if you're a product, key things like that, they want to see that you're thinking about that, even though it might not be perfect. An overview of your product, and that includes, any IP that you may have, including a product demo if you might have one as well that they can access, and even including a product roadmap. So maybe your product's not perfect, but you're able to show key features that you want to add onto the product over time. A summary of your team and org structure. This might also include things like the shareholders agreement or your cap table. And I know you're going to be getting into that later on in this session as well. Market analysis, so any competitor or industry information, and then legal documentation. So if you already have a term sheet that you're working on, you can have that in that section. Again, there's a couple more things on the action plan, but this is a summary of some of the key things that are supposed to be in the data room.
And if you're taking the time to put together an org chart, which I think is fantastic, just kind of give an indication whether they're half-time, full-time, it helps.
Yeah, you can have a legend with, this is a contractor, this is a full-time employee, this is a founder. I think that's really good to indicate as well.
Yeah, because what the investors are doing is they're actually trying to calculate your burn rate when they're looking at they're getting a feel for that.
Exactly. Okay, I'm going to dive now into more specifically my experience with data rooms and things that I faced as challenges or things that maybe I would do differently, along with some tips and solutions. And here I really want to have a lot of discussion. If any of you have maybe faced a similar challenge, or there's maybe challenges that haven't been covered in here, I definitely want to hear from all of you as well. So starting with the first one, I think one of the challenges of a founder when going through the fundraising process is that you're constantly repeating yourself. You're going to get asked the same questions by investors time and time again. And that's just because, people need to know similar questions about your business. So you might go in one call and get asked about the competitors. And then right in the call after, you're going to get asked about competitors again, or maybe someone will follow up by email. So it definitely is, the same questions being asked by all investors. And something that's really helped me throughout this process in terms of a solution to this is creating a due diligence database for myself. So I created all the common questions that we get asked by investors. You can see I kind of put a screenshot of it in terms of like problem, solution, vision, target market. These are all some of the common questions that come up. And I have like talking points for myself, as well as drafted answers, so that if it comes up over email, I can, copy paste and then edit the answer slightly depending on the investor. Or even for grant applications, this is something that comes super handy because you're often getting the same types of questions in grants. And this has been super helpful in terms of a time-saving activity, and to make sure that all the founders or all the team members, if they're going into pitches, they have the same talking points that they're leveraging. And it's not like we're saying different things to different investors. So I would say this has been a super helpful exercise for me, as well as creating email templates. So if, I'm always sending a similar thing of, oh, did you have a chance to check out the deal room? Do you have any questions? Just creating those email templates for yourself so that you're not starting from scratch every time. You're going to be asking similar things in those follow-up questions. So making sure that you can kind of save some time for yourself. That's helped me a lot as well. Dallas, I see you have a question.
Hey, Nadia, nice to see you. This answer database, would you say it's worthwhile to put this in the data room and a part of something that the investors can see, or a version of it that's more like FAQ? And apologies if you went through that, or that's to come.
No, I think that's a really good question. And I would say maybe a version of it. Like I have seen some founders put like an FAQ in the deal room. I would say like this one might be maybe too much detail for the investors, but I think having like an FAQ section with like maybe top 10 to 15 questions or something like that, that would really help, so that an investor can like just look through that, and then it might save you some emails back and forth of questions that maybe haven't been covered.
I would second that, Nadia. Yeah, I think a shorter version would be great.
Awesome, thank you.
And then I think there's a comment in the chat as well. Okay,
oh no, it's just positive feedback. I will say that you be careful of having different versions of things, right? So if this FAQ is different from your pitch deck, and that is also an issue that confuses investors. So one reason to keep this less rather than more.
And making sure then you're going to have to constantly update it as well. So making sure there's not too many versions that you're trying to update all the time as well.
Yeah, great.
And along with the database, I've also created like a financial cheat sheet for myself. And this isn't something that I put in the deal room, but I have it on the like side of my screen if I'm in a call and I need to remember all the key metrics that an investor is asking me. So things like, what's your CAC? What's your click-through rate on your paid ads? What % of your revenue is retail versus D2C? And when we had gone into some pitches where all the founders were on the call, we even assigned who would be answering each question. So that was really helpful for us to make sure that if website conversion rate came up, we're not all jumping in at the same time, but we knew, okay, that's Kiara's domain, that's in marketing, she's going to answer that question. Or, oh, they're asking about production cost, Harriet's COO, so she's going to answer all of those operational type questions. And this is something that does need to constantly be updated, especially if you're putting more current metrics, but it's really helpful for yourself so that, you have that one pager that's your source of truth. And if those questions are coming up, whether by email or in the call, you're able to have that right off the top of your head. It's even better if you have it memorized, because, if you're going to conferences or you're going to pitch competitions and some of these things come up in Q&A, even better to have it memorized. But having it kind of as a source of truth to pull up during these conversations is super helpful as well. And this is just a sample. It might not have all of the financial cheat sheet metrics. And for us, we're CPG, so it might be a bit different for anyone in SaaS. Maybe there's other metrics that come up, but creating a version of that for your industry is super helpful to have as well. Just get the chat. Perfect. Does anyone have any questions on this so far, or has anyone maybe kind of gone through this type of a challenge when raising and have any other solutions that maybe they've done in the past as well? Okay, I'll keep going. I would say the second challenge was pitching my top investors first. So I think in the pre-seed round, one thing that I had done was like, oh, these are my top investors. I just want to get their feedback right away, see what they're thinking about the business, see if I can get to them right away and get them on board. But at the time, our pitch deck wasn't as refined as it was by the end of the raise once we got more feedback from investors. So I would say the solution to this is finding a friendly investor or mentor that you can have to review your deal room and your pitch deck before approaching your top investors. And you have a great resource here with all of the SheBoot advisors. So any like accelerator mentors, or maybe an angel investor that doesn't even invest in your space. So I know for us, sometimes we reach out to investors that don't even invest in consumer, but they still are knowledgeable about the space. So that way we don't feel like if our pitch is not as good as we want it to be, then at least they can still give us feedback and we're not burning a bridge with that relationship. Or maybe if they're a later stage investor, you can say like, oh, I know maybe we're not the right fit now, but would you mind reviewing our pitch deck? And that can help you build a relationship for the future. And so I wrote some examples of friendly investors. It could be, someone who doesn't invest in your space. It could be an existing angel investor or venture fund that you already have on board, someone who's from an accelerator, or even a pitch coach of some kind. There's a lot of amazing ones at Volition or other organizations as well. So finding that person that can review it first before you go on to your next raise. And that's something we did with our seed round. And it was a thing that really helped us is we set up preliminary conversations with a bunch of people from accelerators and other organizations and got them to review the deck first. And the feedback that came in to improve it before reaching out to our top investors was super helpful. So I would definitely recommend doing this, or finding some kind of mentor that you can constantly go to, whether it's the data room or your pitch before going into it. Any thoughts here before I move to the next challenge?
Well, I'll just add, just to get a conversation going too. The other thing we started, because SheBoot's only once a year, we created something we call Women to Women Pitch Time. And it's exactly that. It's a group of women investors that are friendly investors typically, and are there to listen to your pitch. We use it partly as an education and practical experience for newbie investors, but we always have experienced investors on the line, so that we actually try and combine our feedback after you've pitched, and make sure you have that detail for future work as well too. So maybe in January or February when you're looking to perfect a new pitch, that's a way you can go forward. It's Women to Women Pitch Time.
That's super helpful. And even for each other on the call too. Like I know one of the things that I didn't put in here is other founders, because we definitely review our pitch deck with a lot of other founders. They might have gotten feedback that you've never received before. So being able to just have a friendly founder or friend that you can call up and share your pitch deck with, that's always super helpful too. All right, challenge number 3. I think one of the other challenges we faced when doing our raise is allowing investors to steer the conversation and point out red flags. I think our thought process was, this is something we don't really want to come up, so let's just not bring it up and not point it out, because it's not necessarily a red flag, or maybe a weakness of the business more so, I would say. Like when we were raising our pre-seed, we didn't have as much revenue. So we're like, let's not point to revenue. Let's not try and talk about the finances as much. But what I realized was then it allows the investor to steer the conversation, and it might seem more so that you can't control the narrative. And so what we did in the future rounds is we identified those weaknesses and we proactively addressed those concerns rather than waiting for them to come up during due diligence. So another example of this was we had a founder who left early on in the business, and they were on the cap table because they were they were part of the business early on, but now they're no longer. And we would never bring that up, but then they would open the cap table in the deal room and ask, oh, who's this founder? Why do they have shares in the business? And then it maybe pointed to there was something wrong, or it had a bad break in that relationship when that wasn't even the case. And so we now just started to bring that up before even sharing the deal room is, there was a founder early on, they have shares in the business, everything ended in an amicable way, but that's why you might see them on the cap table. And so I think if you do have weaknesses around your revenue growth rate or a cap table or anything else that might be part of your business, proactively addressing them is always better than waiting for them to find it. Because we kind of thought, they might not discover it. Maybe they'll just slip under the rugs, but it's better for you to control that narrative and you to point that out. And often it shows that, like we said, nothing has to be perfect, but it shows you're thinking about these things and you're showing how you're addressing them in the future and what that pathway is. So, even if you're maybe not profitable right now, what is your path to profitability, and showing how you're thinking about all those weaknesses. And making sure that your deal room is easy to navigate also helps with this, so that they're not going through all these folders and then find something that maybe doesn't make sense or isn't fitting with that narrative. So always pre-addressing those things really helps as well. Does anyone have any thoughts?
There's a question in the chat from Dallas. Do you find these things come up naturally, or you bring them up in pitch or email? Where are you bringing them up, Nadia? I guess that's the question. Yeah.
I would say sometimes they would come up during the calls. So we would just try to address them there, like especially in the pre-seed stage when we didn't have as much revenue. It was like, oh, why is your revenue not that high? Or why is your growth rate not as high? So kind of addressing like, what are our future marketing strategies that we're currently working on, or our future expansion efforts? And that helped address it early on. Sometimes it would come up over email. So when we're sharing the deal room over email, we would just address some of those things right away. Like, oh, you might see there's another founder on the cap table. You might see this. And we would kind of just outline it so that when they're going through the deal room, it doesn't come up afterwards. And then they ask those questions about it.
Yeah, and it's previous to when they get the information, right? So you don't necessarily give the deal room. I don't give the deal room information until after you pitch. So, you don't need to bring it up at pitch, but maybe as you're sending out the deal room information.
I would say another challenge I faced throughout this whole process was not securing the deal room and updating it as often enough. So I know when you start with SheBoot, and even when we started, you put it in a Google Drive, but over time, you might be able to also put it on DocSend or some of the other platforms that are available. And I found that that was super helpful, because then you can track who is having access to your deal room and what parts of the deal room they're accessing. So one thing I noticed was we had sent it to an investor, and on DocSend, we realized that they had sent it to like a whole bunch of other people that we had not realized. And so I think it's important, because then you can control who is accessing it. Sometimes people will send it to an investor who has a competitor in their portfolio. And so you really want to make sure that only the right people are accessing the information. And so I definitely recommend DocSend as a platform, but there are like even some other ones that are secure that you can look into as well. But just making sure that you have something like that where you can track who's accessing the deal room, and you're not just making the link available to anyone on Google Drive, but you're adding those people in individually and sharing it to their specific emails.
And I'm going to just talk through the process for Google Drive. Only every investor's email will be provided, so that you can only invite them to that Google Drive. That's the way it works, in view only mode, so they can't take it and move it. You can actually monitor activity in Google Drive as well too, and we're happy to show you how to do that.
Okay, that's good as well. The other thing I've been doing that's helped me so much between the pre-seed and the seed round is making sure I update our investors' CRM after every conversation with any feedback or keynotes or highlights from that call. So this is kind of like a snapshot of what it looks like, but we built ours in Notion. You can build it in Asana or Excel or whatever platform works for you. We'll have the person's name. We'll put like their tag. So like, are they a lead for seed, for Series A? Are they more of a mentor? We'll put any relationship notes. So, like got introduced to them by our mentor from Elvidge, or met them at the SheBoot kickoff event, or wherever we kind of met them, so that we can remember that context. We'll then put the status. So intro call scheduled, or sent the deal room, follow-up required. We have like a few different stages that we put under that fundraising status. And then we'll put any notes. So maybe if someone, passed and they said it's not a fit right now because we require 1 million in revenue and we require XXX, whatever they state, we put that in the last column, so that when we reach back out to them, we can say, I know in our last call you mentioned you want to see $1 million in revenue. Well, we're actually approaching that now. Would you be open to resetting up a call and connecting? And that really helps us, because you're meeting with hundreds of people throughout your fundraising process, and some are not going to be fits right now, but it doesn't mean that they're not a fit down the line. So as much information as you can save about each person, and making sure you update it after every call or at least every week, so that you don't forget that information, that makes it so much more helpful, because you might forget about someone you met and then you go back to your CRM and say, oh yes, I remember I did meet them at Elevate, they had mentioned this, and it's much easier when following up for a future round.
So Nadia, Sakina asks whether are you using a particular CRM, or you're just keeping it to Excel or equivalent? Yeah.
Yeah, I'm just doing ours in Notion. I know people use like HubSpot, or there's other platforms as well. I think anyone works as long as you find one that works for you and is easy enough to update, because if you're spending too much time updating it, that might not be an efficient use of time, but just finding one that works for you and that can be shared across all team members as well, in case other people are interacting with these folks or meeting them, then they can remember what the context was when you met with them as well. Yeah, HubSpot can be costly. So Notion has been, we do all of our project management and everything on Notion. So then we just keep the CRM in there as well. And there are good templates online that you can leverage. This was kind of ours that we used, but it might, vary depending on how you like to set it up as well. Has anyone on the call set up our CRM for investors or mentors, or maybe even like sales clients and stuff, and have any tips or anything?
And Dallas, which CRM did you set up?
I use HubSpot, and I use HubSpot for our sales and for investors, but I've recently started doing it. And actually, Nadia, this tip came from you in like a round table that we did ages ago, I think at Tech Alliance, maybe. But everybody that you talk to, like also, even if it's, just a random intro that you had, or like a networking conversation, like keeping a running database of those conversations, because I definitely in the past would just like, oh, that was such a cool conversation. And you like do a little follow up and then it's totally out of sight, out of mind. And those contacts can get lost. So I'm trying to be a lot better and dedicate time every week to be like, okay, who did I talk to this week? What was it? And update that all in HubSpot, because that's where I'm used to dealing with contacts. But we use Notion, and I'm wondering why you chose Notion versus any other sales CRM.
Mm-hmm. For us, it was mostly the cost. Like Notion was a bit cheaper, and we were able to use it for multiple different things. Like all our to-do lists, all our project plans are all on Notion. But I don't think the one is better than the other. I think it honestly depends on your personal preference and what you feel comfortable with. I know HubSpot's good because you can automate a lot of emails and stuff too, which is nice. So it honestly just depends, I guess, on what everyone feels comfortable with.
Yeah, fair enough.
We also sometimes even put like personal notes in here as well. So I know one of our investors, she mentioned that her son was going to Ivy in the fall. So in September, I was like, oh, maybe I should wish her like good luck on the move, make sure that your son settles in. What residence did he end up at? So little things like that, it's just nice to keep those personal touches so that you're not always just following up with them because you have a round coming up or you have other things. Like if you've seen an article that might make you think of them or something like that, all of those things are helpful, or commenting on a LinkedIn post every now and then. It's nice that you're not just only following up with them when you need something or when you have an ask. It's nice to maintain that relationship with them in another way as well.
Agreed. Great idea.
See, there's a couple things in the chat. Cheryl, do you want to talk about HubSpot and how you've set it up?
We use it for our our sales pipeline. I love it because, like you said, you can automate a bunch of stuff. It like automatically pulls in all the data. So we've used it for our sales pipeline, and then I started to add in our investors. But you can break out one segment for like different categories. So we just decided to track in Excel. But that being said, there's lots of different ways to get credits for HubSpot. They do HubSpot for startups. It's not prohibitively expensive. We just haven't upgraded. And as soon as you upgrade, you get like unlimited. So I love HubSpot. Couldn't function without it.
Oh, great. Great.
That's good to know. Yeah, maybe there's like some, like you said, discounts and things that people can be leveraging too.
Yeah, I might actually be able to share some credits. Let me look into that.
And what do you think you're paying, Cheryl, though? And what do you think you're paying right now?
We use the free version because we haven't updated our like investor pipeline. But the paid version, like the first tier, is like maybe $1,000 a year when you have credits. So I'll dig and I'll pop something in Circle.
Yeah, interesting. Yeah. Okay.
That's awesome. And then one more point on this before I go to the next one. I think also just before you raise your next round, using this to set up preliminary conversations. So if you have all these detailed notes, then after our pre-seed, we looked at anyone we had tagged as an investor lead for seed, and we started to email them, set up conversations. You can use it for who you're sending investor updates to month over month. For us, we do kind of a monthly update to our current investors, and then we do more of a quarterly update to any potential investors or mentors or parts of the ecosystem. So definitely leveraging this as like a go-to of who you're sending your updates to, who you can reach back out to in between rounds. And it makes it a lot easier than trying to go back through your calendar and remember who you met with, just having it as a source of truth. Okay, and then challenge 5, which we'll go into another couple of slides as well, which is not updating the deal room enough between rounds. And the biggest challenge here was we didn't update, once we closed our pre-seed, we didn't update anything, and we just kind of kept going on and doing our business and executing. And then it came to the seed and it required so much updating. We had to spend like a couple weeks just redoing all the projections and redoing all the documents. And so that was a miss for us that we really wish we had updated it more on a frequent basis instead of waiting right until we were ready to raise a round. And then it took so long to get everything up and going. And so this was like, I think my biggest tip out of everything is the difference between pre-seed, seed, series A is so different, and the types of documents that you need to have. And so making sure that you keep your data room up to date will save you so much time in the long run. So we've actually created an audit log, which is basically the table of contents of all of the documents. And we put an like number of how often we should update those things. So for example, like pitch deck, maybe that doesn't need to be updated as often, but something like your metrics and your financials, we actually update that on like a weekly or monthly basis. Things like IP might not have to be updated as often, but making sure, you know, anything that's in that data room, you assign a frequency of like weekly, monthly, quarterly, yearly, anything that needs to be updated, like our insurance certificate, that made sure that we were updated on an annual basis. And then we assigned each team member an ownership of an area that they need to update. So for example, I was responsible for all the pitch stuff, but Harriet was responsible for updating all the product information. So making sure that everyone knows who is responsible, and that's also indicated in the audit log. And then we had a secondary team member who was designated as the reviewer of each area. So even though I was updating all of the pitch information, Harriet was assigned as the secondary team member to go in and review and make sure that everything looks good. Or if Harriet was responsible for the product stuff, I was a secondary team member to go in and make sure that everything looks good on her end. So making sure that you not only have a team member who's owning that area, but there also is someone else who's the reviewer. And if there's ways that you can automate it where possible, I think that is super helpful as well. If you can have, you know, automated exports of data around the revenue coming from Shopify or Amazon, or you have automation of other, you know, key documents, that will help you a lot in the long run as well.
Dallas wants to jump in. Nadia?
This is maybe a silly detail. I know there's no dumb questions, but I feel silly asking. Do you, in the data room, are you doing copies of all of your documents, or are you doing shortcuts to like the master document that you're working on and making all these updates to?
We do shortcuts. I don't actually know if maybe there's a right answer here and maybe we're doing it wrong. We personally do shortcuts, and we'll have like a master document outside of the deal room, just in case, like maybe something's a work in progress, and if someone accesses the data room when we're updating something. I don't know, Julia, if you have another preference.
The only thing I worry about a little bit is permissions then, right? So are you giving them and analyzing the permissions? Are you giving them permission to go with a shortcut all the way back to the original document or not?
No, just on the copied version.
Well, but a shortcut is not a copy, right? So
so you are making copies?
I like the idea of copies only because then you that version is the version that everybody sees. But you know, so Nadia, you would use shortcuts, and were there any permission issues then going like?
I guess it depends on the document, because for example, the financials we have as a copy. So that one we don't have shortcuts, but certain other ones, like for example, like our list of press features, that's like a shortcut that we like have continuously updating. So maybe I guess it depends on the document as well. But I think the only thing is sometimes it results in version control issues. Like I know we have a copy of the finances, but then we update the master, and then we always have to kind of go in and update it in the deal room after. So I don't know if
because your finances should be live, right? You should be always updating your finances, and you don't want the investors to have a copy of a shortcut to your live version. That's dangerous. But Dallas, what were you saying?
I forget now, but I was probably just nodding and thinking out loud. But okay, I'm getting that it's more of like a case by case or like document by document kind of scenario, and use your best judgment where you'd want something to be a shortcut or a copy. Because I would imagine that everything being a copy might be frustrating, but a standing document like a shareholders agreement could easily be a shortcut.
Exactly. That one could easily be, but to Julia's point, the finances is something that we usually copy so that they don't have access to like the live information that's being updated on a week by week basis.
Cool. Thank you. Devil's in the details. This is always something.
Yeah, I know, it's a good question. It's a very good question.
Yeah, definitely a good question.
Thanks.
Yeah, does anyone else want to jump in here about how they've been keeping their data room up to date? Okay. And then also other parts on data room maintenance. I think developing a one-pager on how to access it, specifically for not only the people accessing like investors, but even your team, like having a clear table of content. You can implement a version control. So knowing which version is in the data room. I think this is kind of, I guess, to Dallas's question as well, making sure that you're constantly updating it, and you can create like a living list of all the different documents, and similar to the action plan, showing like what's in progress, what's done, what needs to be updated. That helps you in the long run. And I think especially between pre-seed, seed, and Series A, there's such a big difference in the types of questions that get asked, because I think at the pre-seed stage, it's very much focused on your story and your projections and what's going to happen, versus seed is like, we want to see that $1 million in revenue. We want to see your metrics. We want to see everything that's actually happening with the business. So it becomes much more, you can't really just story tell. You actually have to have all those numbers available.
And in the early stage, they might ask you about long-term value, but they kind of know you don't have enough data yet. You know, so they're very giving on whatever answer you give. But once you get Series A, you got to know those numbers cold.
Definitely. Okay. I'll pause there because those were the challenges that I wanted to go through in terms of some of the things I wish I had done differently in the data room. Is there anything outside of that list that maybe other people on the call have faced? Because I know everyone kind of has a partial data room that they're working on. Anything that maybe you've learned along the way, or things that you wish you would do differently outside of these challenges? Or any tips you've learned along the way as well? Yeah, sure.
I just have a very specific question for probably Julia and Jane, just regarding, because as you guys know, we're in the midst of our pivot. We now have 2 companies. Like, how much information should I be including on Made Outdoor, even though it's not a part of 27K, but it is, they will have shares in 27K. So is there any information like from an investor standpoint you want to make sure I have in there?
I'm not positive I fully understand your structure yet. I didn't read through the last email that was very detailed.
Okay.
But I would actually, when you start having multiple companies, the one thing I think is really good is to have a visual.
Yeah.
And just to demonstrate that quickly, so people understand, which is, you know, obviously not me right now. But yes, I think it's worth bringing it up. Whether you need a full data room, I'd rather take that aside and talk to you about that more.
Okay. Yeah. Sounds good.
Any other challenges or tips? Oh, I see something came up in the chat as well.
Oh, yeah.
Jane, do you want to touch on this?
Yeah, so yeah, I was putting on the chat there because the dog was barking. Yeah, so we went through a process last year that we're a therapeutics company. So obviously IP is a big thing, trade secrets, sort of how we're developing the product. And we used Firmex, which actually I loved it, I have to say, because you can really control access. We ended up using that for our minute book as well. But we had real challenges with confidential versus non-confidential sections of the data room, because not all of the potential investors would sign one. And there is an awful lot of information that we can't share unless there is an NDA or equivalent in place. And it got really, really messy. So we sort of constructed it, had a confidential and a non-confidential section, but actually we ended up duplicating it. So doing that again, I would probably do it very different. But I just wondered if you'd anybody had any advice on managing confidential versus non, and if maybe it is just a question of access, which you can.
I think if I may, Jane, I'm. Your intellectual property is incredibly important, and any patents that are not laid open, as in 18 months after you filed, a patent is laid open, so it's available to the world, should not be available to investors along with trade secrets without an NDA. Those are the two criteria that I work with. Many investors don't want to sign an NDA and should not have access to that information. And I'm not sure what else I would put personally in the confidential section. Did you have other things that you considered?
That was it, really. It was, our IP strategy was in there as well, because it's all the same thing. It was really sort of IP stuff. Yeah.
Yeah. I think that I might have a dumbed down version of your IP strategy in the general, just so that people could understand. But I would just keep that group separate and not try and duplicate the whole thing. But as people sign NDAs, give them access to that smaller data room. It would be my preferred approach for that.
Mm-hmm.
Yeah, that makes sense.
I would also say just making sure that you really research the investor and you've had quite a few conversations, because at the end of the day, like you said, the deal room is very important. It has a lot of information. And before I meet with an investor, I always check their portfolio and see, is there another period care brand or something in there that, they might just be fishing for information? Because sadly, that does happen sometimes, where they take a meeting with you, but just trying to.
That's really sad. That is really sad. And
it's really sad, but it happens.
And that's one of the reasons, just to remind you all, that the SheBoot investors sign a code of conduct. That code of conduct is available in your founder share, so you can read what it says. It's not an NDA by any means, but it does try and make sure that they're aware of the importance of your information and protecting it. And most angel groups, I only really know one angel group well, which is Capital Angel Network. They also have a code of conduct as well. Whether it's reinforced and followed on a regular basis is another question. I can't speak for individuals in that case.
I would say just, hope this is obviously a worst case scenario, but just making sure you do those research so that if you do see that maybe they have a similar company in their portfolio, that you just be a bit careful of what you share, versus maybe if you've had a few conversations and it doesn't seem like that's the case, then doing what Julia said, just having the NDA and just making sure that everything's in order.
Great.
Thank you.
Other challenges before we go to the next section?
What's your timing like right now, Nadia?
We're on track for timing.
Okay, great.
I know we only have 10 minutes, so I'll go into this next section. So the next
a
section
few minutes over, it's okay. Don't feel the pressure. Just reiterating that we're okay. Thanks, Nadia.
I would say the next section is around aiming for good enough. And so a lot of times I know when we talk to founders, they just think that everything has to be perfect in the data room before they send it over to an investor. And so these are some of the common things that we hear. I'm just really busy this week. I'm preparing to pitch and a grant is due. I'm still updating the pitch deck. The financials aren't quite ready yet. I'm doing an updated product roadmap. I don't know how much to include. So I know everyone here has some sense of a data room already put together, but just know that it's okay if some of these things are what's going on. We kind of talked about it at the beginning as well. It doesn't have to be perfect, but showing that you're thinking about all of these items and that they are a work in progress, that's really where the action plan comes into play as well. So it's okay if not everything's perfect. You just want to make sure that you have a good structure in place. And so we wanted to actually take a moment to pull up the action plan and have you start to go through it. We're not going to have time to finish it in the session, but we wanted to make sure that everyone's comfortable with it. So I can also share screen with that. It should be shared in advance. But we want to take a few minutes to just actually go through the action plan and for yourself and your company, show what's in progress, what's complete, what are maybe some of those high priority items that need to be completed in the data room, and also what are some potential challenges that you can see. So let me take a moment to just pull it up. 1 second. So this is the data room action plan. we kind of talked about the current status assessment in the poll at the beginning, but it has a section with all of the different types of documents that you'll need. And you can take a moment to start actually putting it's not started, it's in progress, it's complete, or maybe it's not applicable to you depending on your company. So we just wanted to give maybe 2-3 minutes to start to go through it so that after this, you can start to see what are the top things that actually need to be updated that maybe are not in your drill room yet. And what are the maybe potential challenges and solutions? So maybe you think the financial projections are the one that needs the most work, or maybe your product roadmap. So starting to kind of identify a few priority areas and action items that might need the most amount of work as you lead up to that SheBoot deadline and preparing the final data room to share over with individuals. Does everyone have access to that document? I can also share it if needed. I think everyone should have access to it. And so we'll just maybe give 2-3 minutes right now to start to go through it. And as you're going through it, if you have questions about some of the documents on that list, feel free to come off mute and let us know as well.
Yeah, typo there, Katie. I have to read it 3 times before I get it.
Not, sorry.
Okay.
Okay, I know you might not be done the whole action plan. We just wanted to give you a couple minutes to access it, to start to get started on it. But in terms of the next steps for SheBoot, I know everyone's going to be sharing your data room on October 13th. So this document can really be a helpful source of truth for you to see what are those documents that need updating, which ones are the priority items to get finished first, and what maybe need to be updated afterwards. So even after this call, within the next week, I would recommend going back to that document and maybe even sharing it with your team. It doesn't have to be just you. If you have co-founders, make sure that you share the responsibility with them to update some of these documents, and maybe even start to specify what specifically within those documents need updating. So in terms of the financials, maybe just the revenue forecasts need a bit of updating, or maybe the unit economics, kind of get into more detail within each of the documents, what needs to get updated as well. And so again, a reminder of the next steps, October 13th, which is actually coming up in a couple of weeks, which is crazy to think that it's already October. That's when the data room is going to become open to investors. So making sure that you use the document in the next couple of weeks to start to update and make sure it's, again, doesn't have to be perfect, but in that good enough state to share. You can use it as an opportunity to get feedback from investors as well, and see what the common challenges or weaknesses that they point out in your data room. You also have a number of resources that we shared at the beginning. So that checklist, your Google Drive folder, as well as the coaches and advisors, and finding those friendly investors, maybe outside of the program, that you can quickly share it with and get some feedback. Or together, if you have a co-working session, I know some of you are doing that as well, then you can meet together and talk about that as well in terms of what you want to work on. And that was pretty much it we had for our presentation. I hope that was helpful. We wanted to talk about not only the documents that need to be in the data room, but also just some tips from my experience on what I would have done differently. And in our last, I know we have about 2 minutes before it transitions to the next portion. Is there any kind of final questions, thoughts, things that maybe we didn't get to cover in this session that are keeping you up at night around data rooms, or the overall kind of fundraising process when it comes to due diligence?
The group's being quite quiet today. I think data rooms maybe are overwhelming. Is anyone feeling overwhelmed by data rooms? Yeah,
And
yeah, a little bit. Okay.
And that's
Nadia,
okay. I know
yeah.
it is overwhelming.
Nadia kicked off the conversation on dealing with difficult questions well, and as I put in the chat, there will be a good session on Thursday with Jennifer Francis, Chelsea from the 51, Gilbert, and myself. Yeah. Oh, Cheryl, you know Chelsea? Yeah, yeah, good. Yeah.
Yeah, she's awesome.
Isn't she awesome? Yes, she's awesome. Yeah. Excellent.
Okay, I think that is the end of our portion, but thank you so much everyone for tuning in and for listening, and hopefully you can now go through your data room action plan and start to think about next steps. Again, it can be overwhelming as we all talked about, but I think it really helps you to just go document by document. And as we reminded several times, it really doesn't have to be perfect. So just go about it as best as you can. And remember that, the immediate thing you're working towards is that October 13th deadline. And if there's other things that you update afterwards for other investors, don't worry about that yet. Just focus on getting it to the state that it needs to be ready for SheBoot, and then you can focus on other things afterwards as well. So try to take it one step at a time. And if you have questions, you can always reach out to me as well. I'll put my email in the chat as well.
There was a question, Alina. I can't remember who is speaking.
I do have a quick question, but if somebody else does, I've asked a lot, so somebody else can go.
Well, it was Alina put in the question, what is your approach to deal with investor delays on providing feedback on the data room?
Really good question. Yeah, and that's where the CRM comes in handy as well, as I will put like what date I followed up with them on. And I always ask them like, what's the next step internally for you? Like, when do you, I know most investors and VCs meet on like Monday afternoon. So I'm like, oh, do you meet on Monday afternoons to review this with the team? When can I expect to get another answer? And if they say, by this date, I'll write that in the CRM. And then that reminds me that on that day, if I haven't heard from them, maybe the next day I'll follow up and say, I know you mentioned that we might be able to get an answer by now. Is there an update? And usually most people will at least say, oh, we're still reviewing it, or, oh, we had a few more questions come up. So I think that's where the CRM comes in really handy to be organized and make sure you just always ask them, what's the next step in your process? When can I expect to get another response about other questions? That's usually very fair for them to answer for you on the call as well.
And I like that saying, be pleasantly persistent. It's okay. You're a founder. You're supposed to be persistent, but do it pleasantly and just gentle reminder emails. Alina, you're jumping in.
Yeah, no, what is normal and what is not in terms of time for waiting? Because sometimes I know I have the experience, not for me, but for other founders, that sometimes it gets in this loop that it just takes forever. So what is the right approach in this case?
What's forever mean from your standpoint, Alina? Like 6 months? Is that forever?
No, I don't know. I am just asking because I don't have experience. So I just wanted to know how much we are willing to wait, or if this will delay other interactions, how you manage in this case.
Yeah.
I would say I usually wait like 2 weeks at the maximum, even sometimes within a week, I would follow up with someone. But if they say, oh, it's going to take me till next Wednesday, then I won't follow up until after they say. But I think within 2 weeks, that's totally reasonable to follow up and say, oh, are you done reviewing, or have some addition? I usually always say, oh, has any additional questions come up as you've reviewed it with your team? Is there anything I can answer? Do you want to hop on another call? And they'll usually at least reply within that timing. And yeah, you have to get shameless with your follow-ups. I like that, pleasantly persistent, because I feel like that's something to get over right away. Is like, I might have to follow up with someone 4 or 5 times before I get an answer, and I can't take it personally. Like, You just got to put yourself out there and keep following up with them, because people are busy. They're reviewing lots of companies, and it might not be anything against you, but they're just trying to go through all their backlog of who they're meeting with and reviewing all the diligence with them as well.
Yeah, absolutely. Good. Dallas, do you want to jump in quickly before we switch off?
No, I'm good, actually. Thank you, though.
Okay, awesome.
Excellent.
Thank you again so much, everyone, and good luck with the next part of the session. And feel free to reach out if you have any questions.
Totally enjoyed it, Nadia. Thank you so much. Yeah.
Thank you. Okay, folks. Perfect. People are slowly arriving. Hopefully everyone got up and stretched a little bit. Looked out a window. That's what I always say. Good for the eyes. Okay, you can go ahead and get started, Kayla. We want to maximize the time. We've got important things to cover.
Okay, awesome. And just bear with me if it seems like I'm not looking at you. I just have bigger screens that I'm going to go off of. And feel free to interrupt me at any point if you guys have questions or personal stories you want to share. So I've sort of introduced myself and provided my background. Today we're going to talk about cap tables and their evolution. I'm going to touch on the CCPC status, which is your Canadian Controlled Private Corporation status, which is a key term in the Canadian tax stature. We'll talk about employee stock options, and we'll also kind of connect the dots between what we've captured today and what we would expect to see in the data room. And then at the end, of course, if you have any questions, but don't hesitate to just ask questions throughout. So one slide that I put in here is key terminology. I'm not going to spend time going through the definition of these because I know you have access to a glossary of terms. These are just key terminologies that we see used a lot in practice. Some of them where I've put verses for vesting, granted, exercise, options, and warrants. I see those used a little bit interchangeably when they do have different meanings. So it's just good to understand the difference between some of those. And anyways, I think we'll talk about all of them throughout today, but I just wanted to list them so you have reference to your glossary later. Okay. So topic number 1, cap tables or capitalization tables. I'm hoping by the end of the presentation, we can kind of answer these questions. So I have a good slide on why do these matter. I know you guys spoke with Lorraine last week about what is a cap table, but we're going to go through kind of a template example. What is my diluted ownership? How should I structure my ownership? We're going to touch on a little bit later. What does my investor want to see? And who will ask for these cap tables? So starting with who will ask for these, because that's the one thing we don't really cover. Obviously, investors, both current and future, are going to want to see the cap table. They want to know what they're investing in and how that might change. You're going to be interested in your cap table. We've seen a lot more CRA audits recently. CRA is going to ask for your cap table. Any sort of tax or other advisor is probably going to be interested in your cap table as well. Okay, so for your capitalization table, I've kind of put 7 bullet points here and then some other thoughts that I wanted to go over. But your cap table, specifically your pro forma cap table, which we're going to touch on later, is a really valuable tool to help investors understand how their ownership percentage will change on future funding rounds. It's also a way for you to fiddle and see what instruments do you have outstanding, what is your diluted ownership, and what are you comfortable with for your total dilution down the line. From a deal perspective, a cap table will also tell the buyer who they're buying the company from, which is obviously something of interest for any exit or any buyer. Valuation insight. I know this is also something that you guys touched on last week, but the pro forma cap tables are a really cool tool that you can use to manipulate valuations on potential deals that you're talking about. You can see what a certain value will do to your investment and your diluted investment for any instruments that you have outstanding. It's also a great tool for scenario analysis, which is along the same lines, but basically just it allows you to model different things that might come up. Normally it's your lawyer who you're working with, or your capital advisor who's helping you with the capital raise. They're really familiar with how to manipulate these pro forma cap tables, and they can get quite complicated depending on what instruments or what convertible debt safe instruments you have outstanding. But it's a great tool just to see a full picture of what you're getting yourself into before you sign up for anything. And then along the same lines, it's your negotiation tool. So, you may come in looking for something, an investor may come in looking for something else. And by having your cap table that you can play with, you can get to a point that you feel comfortable with on your ownership and your future ownership before you execute into any agreements. Obviously, all of this helps with strategic decision making. Such as setting up employee stock option plans, if you're looking at selling the company or bringing in new investors, preparing for an exit. It's really important to know what your ownership is and how your ownership could be diluted. So transparency is a big one. A clean, well-maintained cap table establishes trust with your investors. Your cap table is an Excel summary, but it is going to agree to all of the legal underlying documentation. And so having a cap table that agrees and is up to date, so an investor or an advisor or whoever can come in and follow along, just is a great way to establish upfront trust. And then there's compliance. So all of you guys are incorporated. Every year you'll have to file your annual tax returns, and your cap table is what your tax advisor is going to use to fill in Schedule 50, where you have to tell CRA who owns more than 10% of your company, essentially. So a common misconception that we see in practice is like a misunderstanding of who's responsible for maintaining the accuracy of the cap table. And I think for the most part, it's assumed that the lawyer is responsible, and most people do rely on their lawyers to maintain their cap tables, but lawyers can only update to the extent that they have the information. And I've seen it in practice where there's, agreements executed that haven't made their way to the lawyer. So by the time the cap table comes to us, it doesn't agree to the underlying documentation, and it causes confusion, and there's just time invested to be able to figure out what the current cap table is. So just as founders, remember that it's ultimately your responsibility to make sure that your lawyers have all the updated information that they need to make sure your cap table is up to date. So your cap table is vital for monitoring your CCPC status, and we'll talk about that a little bit later, but your cap table is a snapshot to say, okay, who owns or has ownership in your company? Are there any US or foreign investors in there that could put that CCPC status at risk? Another thing here I wanted to mention is we see it a lot where companies or founders use shares to supplement as currency, and it's pretty attractive if you don't have the cash to just issue shares or issue options. However, just remember that whoever you're issuing your shares to, you're giving them equity. Shares are gold. We like to use the phrase of you're inviting these people to the dinner table. So just make sure whoever you're bringing onto your cap table, whether that's an advisor, key employees, consultants, etc., it's a long-term relationship. You're comfortable having them on that cap table and being a part of key decisions later down the line. And then another point here, and we'll talk about how dilution is not a bad thing as long as the pie is growing, but there's a ton of non-dilutive funding options, especially for Canadian corporations. Ones that we see utilized a lot are SHRED tax credits, so basically refundable tax credits from the CRA. IRAP has some great options. There's some non-interest bearing loans that I've seen through FedDev. And a couple other ones, but I would say those are the main non-dilutive funding options we see. Some people enter into regular promissory notes so that they don't have to have a conversion option. And basically non-dilutive means this funding won't impact your cap table.
Right. I'd love to see these visuals now, Kayla.
Okay.
Yeah.
So this is the first cap table visual. And this is what I call just a current cap table. And you can see my mouse? Okay, so you can see that I put updated September 2024. it's just a reminder that anytime a share transaction happens, you want to update your cap table. So at any point in time, you know what the snapshot of ownership looked like. Here in this example, we have founder A and founder B each having 1 million common shares each, Class A common shares. Rule of thumb is if you're going to grant shares, do at least 1 million. In this example, I did 2 million. It's a number up to your judgment, but we find just the bigger the number, the easier it is to navigate with later. These cap tables show that there's 2 classes of shares outstanding. Sometimes we see this in practice where when you have a stock option plan in place, you want to give those employees a different class of share. Sometimes, and specifically, we see it as a non-voting option. So you can declare dividends on Class A, for example. You can make decisions without having to consult these minor shareholders who are your employees who've exercised their options. If you're not sure what classes of shares you have outstanding, look to your articles of incorporation. That's going to tell you what's outstanding, how many you can issue, and what attributes are related to each of the shares. Over here, we see that we're showing the ownership, which is the key part of a cap table. And then I put in the dollar paid for the shares because as an accountant, when I open a cap table, that's what I'm looking to see, what was paid for the shares. All of this information is just a summary, like I said, that agrees to the underlying legal documentation. So whether it's your articles of incorporation, share register, or share subscription agreements, or grant agreements for stock options, there should be something to support where these numbers are coming from. Oops.
Jumping around a little bit. Is that just me or?
What, sorry?
The screen is jumping around. It's probably just me.
I think I accidentally clicked. That's what happened.
Okay.
Okay, and then down here, this cap table also shows a summary of what the stock option plan looks like. So in this example, you can see there's 200,000 stock options outstanding or available for issuance. That's 10% of the overall shares outstanding, and that's a good rule of thumb that we see in practice all the time. In this example, you can see 40,000 have been allocated or granted to employees, and there's still 150,000 that the founders can play with. This is a really good picture of what the current non-diluted cap table looks like. And one thing that has come up that we wanted to mention too is that even if you're not going to issue options to employees right away, it is sometimes good just to get your stock option plan in place if you plan on having one, so that when an investor comes in, they know what that dilution is going to look already, and you're not sort of immediately diluting an investor after they've kind of put money into your company.
And I'm just going to pause a little bit, Kayla, just to ask the question. We're going to get into more detail on stock option plans in a second, if you're not sure. I'm just curious. I'll show a hand. How many of you have an employee stock option plan already? 1, 2, 3, 4. Yeah. Okay. So a few of you. Okay. Good to know. Thank you. And there was a question that came up again. Do we have do the 2 classes of shares also have rights, or we do have these? Jane asked the freaking question. I'm not reading it well.
Yes, I just when Kayla had mentioned about having the 2 classes, I thought we were very, very unusual in doing that, in that we have the voting and the non-voting. And part of the reason we did was because originally we were pretty sure that our well, one of my co-founders is not Canadian, so we've also got we've got that in place, and we've also got a founders agreement that gives me rights over deciding votes and things like that, so that we can maintain our CCPC status. But it was just good to hear that is not uncommon, because I've not come across anybody who had split the shares like that before.
Yeah, I see it mixed in practice, honestly. Some stock option plans are regular common shares, and some are Class B common shares. It just depends for, like, what you're looking to do. And when you talk to your lawyers or your tax accountants about your plan, like they'll probably advise you either way. And your example is great that you did it to maintain your CCPC status, right? And this example where I was coming from was like, let's say they wanted to pay dividends or they didn't want to have a ton of people that they had to consult for votes. That's why, that's another reason that you could have a separate class of share.
And we're going to come back to other classes in a second too, as well as talk about CCPC status.
Yeah. Cool. The next slide is on pro formas. Is there any questions before I move on? Cool.
Yep.
Sorry. Okay, so this is one example of a pretty basic pro forma cap table. I put this together solely to kind of show you the purpose of what that is. Again, you can see in the top left corner, it's clearly identified pro forma, clearly says updated September 2024. So you know what the cutoff is of when, you know, instruments have been issued. On the left side of the screen, it's the exact same picture. You're seeing founder A and founder B having 49.75%. You can see the dollar value that they paid in. So that's your current cap table. And on the right, we're showing the diluted ownership. Different pro forma cap tables look different. I have seen ones look like this. I have seen them be completely separate tabs depending on how complicated they are. The main difference here is that Example Incorporated had a convertible debt instrument outstanding. And so if you just looked at your current cap table, you weren't going to be getting a full picture of what that diluted ownership looked like. So in a very simple example, this convertible debt agreement would be converted to 100,000 Class A common shares at 4.3% of the total ownership. So founder A and founder B's diluted ownership is actually already only at 43.5%. This can get complicated if you have safe agreements. As soon as you bring in like a series A, you'll have to redo your pro forma cap table, but it's just a good practice at any point in time to know what your diluted ownership is. And like I was saying, there's some pretty cool modeling you can do with cap tables. I've seen our clients work with like Welch Capital Partners, for example, and their lawyers to kind of manipulate the best situation for the founders versus the investors. Yeah, it's a really good information tool. But I think for basic pro forma cap tables, it's just good to list what your instruments are outstanding to get a sense of what your diluted ownership is.
And you've added in the unexercised options in this case, no?
Yes, so down here, you can see that there was unexercised options of 190,000. So to show a true dilution, you have to show what the impact of that would be. So yeah, I've included that here. It's obviously up to founders and board discretion what options actually get granted, but since they could grant up to 200,000, you might as well show it in your diluted cap table.
Questions? Pause a little bit for questions.
Nope. Okay. So
I'm gonna pull the group a little bit again, just to, so how many people have seen pro forma cap tables before? I just don't have a sense of this. Yes, okay, so most of you. Okay, so I'd say 75%. Okay, good to know. It's excellent. Go ahead, Kayla.
Okay, so our next slide just talks about the evolution of a startup's cap table. And it's similar to a diluted cap table through the life of a company, but I find the pie shape gives a better view. So starting very early on with early ownership, in this example, the stock option plan was already in place. And you can see that founder A and founder B have pretty good ownership, 45% of a small pie, right? Because there's not a ton of value yet in that company. Couple years down the line, they bring in a significant investor, 20% at 500,000. So they're diluting themselves down to 36%. But again, the dilution is for a bigger piece of a pie. The company's growing, the valuation is higher. So we're just showing the picture that just because you are diluting yourself, it's not always a bad thing. And then oftentimes we see a Series A. So in this case, there was a investor VC invested $2 million on a pre-money $8 million valuation. So the dilution went from 45 to 29%, but now the company's worth $10 million. So all we're trying to show here is that like you can dilute your company as it grows, and as long as when you dilute, the pie is growing, it's a positive thing for the company. And as you're doing this, you're obviously wanting to work with your investors to make sure they have a sense of what the exit opportunities are and what their return on investment is going to be. But I think this is just a good visual of what that looks like.
And when Kayla first showed this to me, I said, well, actually, some of our founders are before this first bubble and are really just one founder or two founders ownership. So, you know, this early ownership is an example of probably where you want to be for this raise. Having an employee stock option plan in place is a good thing when you're raising your first round. You have to imagine being an investor who just, you know, put money into your company, and then essentially, as soon as you put the employee stock option plan in place, loses 10% of the value. So, you know, if they put 50,000 in, suddenly it's only worth 45,000 because they've been immediately diluted before that. Okay.
And I'll just add to that, when you put your stock option plan in place, you can always change it. You can always amend it with the approval of the current investors. Let's say you start with 200,000 options on that stock option plan. We often see companies start increasing the pool of options that they can issue. But that's obviously a conversation with investors and depending on what the business needs are as the company grows.
We also got a question, Kayla, in the chat about tools. I typed out Carta as an option for a tool. Are there other tools you'll think of?
Yeah, I know Pulley is an option for you know, cap table and stock option management. Carta is an option for cap table and stock option management. I see your question though about modeling, and for the most part, I see the modeling done in Excel by the lawyer and whoever your capital advisor is. Carta might have tools, and I just haven't seen them used in place. I normally see Carta used for administration, so getting signatures, keeping a continuity. They even do, like down the line when you have specific reporting, they even do calculations of stock option expense for different accounting standards, which like as accountants, we like that, and it is a pretty cool tool. But for the modeling, I've mostly seen that done in Excel. And then I see another question, is 10% a typical slice for ESOP? And yes, we say that that's a really good rule of thumb. Most of our clients have 10% allocated to employee stock options. There's probably a fluctuation there. Like I said, sometimes the pool increases, but I would say that would be very common practice.
Excellent.
Okay. That's my last slide on cap tables. I'm going to move into CCPC unless there's any more kind of cap table related questions. Okay. Okay, so this is a chunky slide. What I'm hoping you get out of this is just that there's a ton of benefits to maintaining your CCPC status. And when I say that, it's essentially that you're a Canadian controlled private corporation. So a Canadian controlled private corporation is a tax term. There's a big definition, but a key attribute to being a CCPC is that it helps you qualify for being a small business corporation under the Tax Act. And that allows you to have preferential tax rates for your first $500,000 of active income. You get extended deadlines to remit taxes, which for most early stage tech companies is not applicable because you're investing in your company and you're operating at a loss, which is really normal. There's a ton of like benefits to stock option holders, like employee stock option holders, if they're granted by a CCPC. And for certain CCPCs, you can receive up to 20% additional refundable credits on your SHRED claim. So that would bring your total SHRED claim, which is your scientific research and experimental development claim, to 35%. Another big benefit to being a CCPC is upon an exit, you can leverage your lifetime capital gains exemption. So before I get into the lifetime capital gains exemption, if you ask yourself, like, how do I know if I'm a CCPC? Well, looking at your cap table will help, but a really quick way to do it is just look at your most recent filed T2 corporate tax return, and you have to check off if you're a CCPC or not. And I would assume that most of you probably are a CCPC at this stage. Okay. So I would say lifetime capital gains exemption is a really big benefit, especially for tech founders who are building companies that they're planning to exit. Essentially what that means is if it's of shares of a CCPC, you can provide access to up to $1.25 million on tax shelter, basically, or tax-free capital gains in an individual's lifetime. So just so I can re-say that, because I think I stuttered, but if you sell your company and you sell your shares, you'll realize a capital gain. And on the first $1.25 million of that gain, you don't have to pay tax. We see clients use this all the time. And one of the questions that we get, which kind of leads me to my next slide, is how can you maximize your lifetime capital gains exemption? So that's done by owning your company through a trust. There's pros and cons, but I'm going to start with the pros of owning your company through a trust. Let's say you sell your company for $10 million. If you own that just individually, you're going to get access to $1.25 million of the first part of the gain tax-free. But anything on top of that, up to your 10 million, you're just paying regular tax on that capital gain, right? If you own your company through your trust, you can have multiple beneficiaries of a trust. And we've seen it where the beneficiaries are, a husband and wife or kids. We've seen it with parents, brothers and sisters, nieces and nephews. So even if you don't have kids, you can put other people in your trust as beneficiaries. And all of them can be allocated a part of the gain so they can each use their lifetime capital gains exemption. So if you have 5 people in your trust, right away you're looking at over $5 million of tax shelter instead of $1 million of tax shelter if you owned it individually. So it's a lot to digest, but it's just a mechanism to be able to multiply access to your lifetime capital gains exemption.
And if I could, so I have a trust. I guess I still have a trust. And I had a trust when I was involved in the sale of Chipworks, the company that I was a co-founder. And the one thing there's a few things I regret about everything there, but one of the things I regret is not starting a trust sooner. It became, I lost some rights because of it. I didn't get to take full advantage because I was doing it less than 2 years before the sale, I think was the detail, Kayla. Yeah. And so, it does seem like a pain, but it was a huge benefit to me and my kids, because I was able to use their lifetime exemption, but I was also able through that to put money aside for them for their their first home. So they for their time of life, it was a good thing that I could do that, and they still have that money allocated to them in the trust, ready for when the second one is going to buy their first home. So you need great accounting help to do something like that, and so because they're great accounting help, it is not a cheap thing to do, and it's maybe not right at this moment that you're going to think about that. But it could be a year from now. It could be, at least understanding this and knowing about it so that you can activate it at the right time. I highly recommend.
We've seen people have really successful exits and really be grateful that they had their trust structure set up. Julia made a really good point that timing matters. So on the one hand, you need to own the shares in the trust for at least 2 years. But on the other hand, you got to think about when does it make sense to set up. So, I mean, you guys will have a sense of what the forecast of your company looks like, thinking about that 2-year rule, but also remembering that there's not a ton of value in the trust until your company is going to be worth more than that $1.25 million.
Yeah.
Because the whole idea in the trust is that you're trying to multiply access to it.
Right.
And then the other thing that comes into play, and I don't think this is a big consideration, but the more shareholders you have, possibly you'll need more approvals to make the changes to your structure. You have to transfer the value of your shares out at fair market value. So there'll be a little bit of work on doing a valuation calculation, but you'll just work with your accounting advisors to come up with something that CRA essentially would accept. So that's all under the timing matters. And then like Julia said, it's a little bit expensive to set up. There's annual trust filings that have to be done. They're due in March of every year. And there's a limited life. So all trusts have a 21-year life. So if you set it up now and you haven't exited in 21 years, it's not necessarily beneficial, because you'll have to set up a new trust or look at different timing options. But I would say those are the main cons to having a trust set up. And it's definitely something to think about. Even if it's not right now, just think about it every year when you're doing your, year-end filings. Like, does it make sense to, consider a trust again now? And the other thing is your lifetime capital gains exemption does increase every year. So in 2024, it's 1.25 million. In 2025, it'll probably increase by a specific percentage. So let's say some of you have had previous companies, you've already used your lifetime capital gains exemption. You probably still have a little bit more room that you could capitalize on.
Great.
And I have one thing that I forgot to mention on the last slide, but we're seeing a lot more US investors coming in. And so the US investors are coming in trying to convince companies to flip their org chart because they want to invest in a US corporation. Just remember again, there's a ton of benefits to being a CCPC. And there's creative ways to structure that investment so you can maintain your CCPC status while bringing in a US investor. It's a little bit, I'm not going to go into what the mechanics of that looks like, but just keep that in mind, I guess, if you are getting that pressure from US investors to sort of flip your org chart, that there's reorgs possible to facilitate keeping your CCPC, which again gives you access to shred your lifetime capital gains exemption and some of those other tax benefits that you can maintain. Is there any questions on trusts or the CCPC status?
Something did come up. It was positive feedback.
Awesome.
So yeah. So you move on to ESOP.
Awesome. Okay, ESOP, employee stock option plans. We see this all the time in practice. It's great to hear that some of you guys have this set up. Stock options are a really good way to remunerate employees, directors, contractors, and advisors, in addition to or in lieu of salary and cash payments. I'm just going to walk through my bullet points and then we can talk a little bit more in practice, but always involve your lawyers to draft your employee stock option plan. Both from a corporate law and from an employment law perspective. We did a session a couple years ago with an employment lawyer, and I see stock options all the time, and I learned so much just from hearing her perspective on what's important from an employment law consideration. Tracking and record keeping is so important for employee stock options. And we referenced CARTA, we talked about CARTA before. In practice, we don't see people implementing CARTA till a little bit further down the line when there's more stock option activity. But just remember, if you can, to have in Excel a list of who you've promised stock options to, a check, have you executed all the legal documentation for those stock options? When were they issued? What are the terms? and kind of keep that as an ongoing continuity. So at any point, you know what your stock option picture is. It'll come up for investments. It'll be important for your due diligence, but it'll continue coming up as your company grows. And like, for example, I do lots of financial statement audits and reviews, and stock option continuity is something that we often see has a ton of cleanup involved. So the more diligent you are early on in the process, the easier it will be down the line. General terms, so consider what class of share you want your stock option plan to grant. Consider what your vesting terms are. We see it anywhere from, we honestly see tons of vesting terms, but it can go up to like 4 or 5 years that you're going to earn that option. What's the life of the option? So how long does that employee or director have to buy it? I think the longest I've seen is 10 years. And then when can they exercise? So that really goes in line with the vesting. So they can exercise options essentially as they earn it through the service. Think about how much percentage to set aside for the ESOP plan. Like we've shared, typically we see 10%. But again, it's really up to your discretion. When to issue options. So this is more of an administrative tip, but you can issue options really whenever you want. I find in practice that if you have a bit of a schedule, let's say you issue options quarterly, it can really reduce the administrative burden instead of like issuing, January 3rd, March 15th, February 2nd. You can have one board resolution, all of it gets approved in the same, meeting. It can be so much cleaner if you do it that way, but obviously it's whatever works for, the business at the time.
Can I jump in for a little while, Kayla?
Yeah.
So this is a great way to incent employees, contractors, advisors. And the reason why it is great is because you're kind of only paying for what you get. So if you hired an advisor and he says, well, I want, like 1% of your company to help you. Well, if you don't like this person after a month, they still have 1% of your company. This option process allows you to really feel people out a little bit. And, if it doesn't work out after a month, they probably have nothing, because as Kayla suggested, I think quarterly is a good process to use. And the most common I would see is a 2-year period where you distribute the options quarterly, and correct my language if I get anything wrong, Kayla. And so that, if they've stuck around for 2 years, well, you must have liked that experience. So you got your value from, providing them those options, which, they can now purchase at some point as well, too. I probably got language wrong, Kayla. Did I get anything wrong?
No, that was great. And the only thing I'll add to that too is that normally in your overall stock option plan, you have a lot of like at the board's discretion. So this is what these are my general vesting terms, but maybe for a specific employer or a specific contractor, you're not sure and you kind of want to protect yourself a little bit more. You can change the terms in that specific person's grant agreement. But again, just that goes back to tracking it and making sure it's executed. And if you're changing the terms, connecting with your lawyer to make sure you have the proper grant agreements updated. But that option is always there.
And the other thing as a learning at ChipWorks was most employees, contractors, anybody you're going to talk to don't understand what these things are either. So you have to explain them, what they really are as well, and use it as an incentive that, as they work harder, they'll get more of the company, maybe a not huge slice, but it's amazing how much a small slice will incent someone as well.
Exactly. And the last bullet point here, I'm not going to go in depth about the tax perspectives for stock option plans, but again, there's benefits to maintaining your CCPC status for that employee's perspective. And a really high level example, if you're a CCPC and you grant an option to your employee, they don't have any type of tax until they actually sell that option, which is very appealing, because if they sell the option, something probably has gone right with the company, right? There's been an exit and that option has kind of changed hands. Then they realize income and a capital gain. Versus if you're a public company or a non-CCPC, as soon as they exercise, so as soon as they purchase the option and it becomes a share, there's an income item there that they have to realize. And then eventually when they sell that option, there's the capital gain portion. So it's just another benefit of the CCPC. That's all I was going to talk about on stock options, unless there's any comments or questions. Okay. So the last slide here is just from everything we've talked about today, what would go into the data room. And I know you guys just had a session on data room, so probably it's a little bit of duplicate information. But
no.
Nope. Okay, cool. So from today, we would expect in a data room that you'd see your cap table. And again, I'm saying a cap table that agrees to the underlying legal and financial records in case someone wanted to dive in and check that. Articles of incorporation, so the investors or the people digging around know what share classes are outstanding and what the specific terms are of the shares on your cap table. A trial balance that agrees to the cap table, or just including your trial balance, or essentially your financials in your data room. Your executed stock option plan, and I say that because I find in practice there's a lot of draft plans, but there should be an executed stock option plan, and that's the one that you would want to go in your data room. Continuity or listing of options granted and their related terms. So I love continuity because it gives you a snapshot of what your options were at each fiscal year, but a listing of options with their grant date will essentially give you the same information. And I think that's really relevant to investors because they want to know what stock options have been granted, how many are still available to grant, and it should tie in again to what that diluted perspective is on the cap table. And then probably your Canadian corporate tax return, your most recent tax filings. Okay, so that's my presentation. As Katie mentioned, I am available for office hours. So if you have any questions on what we covered today, I'm happy to connect on it. I also have colleagues at Welch who are very specialized. So if you have questions on, I don't know, US tax or commodity tax or shred, we can pull in specialists to go over your questions. And I know they're really happy to join. From my perspective, I'm happy to talk about accounting policies, rev rec on contracts, any sort of accounting and tax related questions. And then of course, anything that we covered today.
Great. Thank you, Kayla.
Thank you guys for your time.
Do you want to play Stump Kayla now and see what questions we can come up with that maybe weren't part of this presentation, but might be burning questions for you?
Sure. I'm just going to move you back over here.
Small challenge, Kayla. I know. Nobody's jumping to the opportunity. She seems hard to stump. Thank you, Jochen.
I see it in the hand.
Jane, go ahead.
Yeah, just a quick one. This may be an offline conversation, but historically, we've with the companies that I've worked in and with before, even startups, have been more used to LTIPs rather than ESOPs. So like the long-term incentive plans is sort of more like a kind of vesting, we're actually given the shares as opposed to having to buy them as an option. So I just wanted to get your perspective on that, or if that is a offline conversation that's not going to be a quick answer. Just the pros and cons.
I've seen it where, I don't know if it's under an LSIP, but I have seen companies that sort of help employees fund purchasing the options. And it's basically, the way I've seen it structured is there's almost like an intercompany loan set up with the employee. And then you'll decide how that gets settled, if it's settled, or if that's something that kind of is settled upon like an exit opportunity. That's what I've seen in practice for that.
It's interesting.
I actually have a story to go with that one, because my first technically full-time job was with a company called LSI Logic. It was a Silicon Valley company, but I was working out of Toronto, and they pretty well, the very first day they said, we need $2,000. And I went, God, I'm just starting work, folks. I mean, why do you need money from me? You're supposed to pay me. And I'm very confused. And it was essentially, the company was about to do an IPO, something we don't hear about a lot anymore, but it still happens. And they had to gather and clean up all the books at the last minute. So they had in my offer granted me some options, which I needed to buy. So they loaned me $2,000 to buy them so that I would now own them and then clean up the books. So, you know, it does happen. And yes, I have no idea the details of that loan, since I was blurred by all this needing money from an employee on the first day they arrived stuff. But that's the way things were back then. So anyways, lots of different options though. I mean, at ChipWorks, we ran through a bunch of different options. Even as a private company, we were able to come up with some incentive programs that were quite interesting.
And it's a really good point too, because when you actually look at the terms, like some people are getting 100,000 options at 50 cents, you know, as their exercise price. And realistically, are they going to put 50 grand in? You know what I mean? So it's definitely something to consider. I would say too that we often just don't see a ton of options being exercised, but giving them that 10 years to actually exercise the option, like, there's a increased chance that there's an exit that's going to happen, right? And they know that there's some money coming in to kind of help fund that purchase.
Yeah, exactly. Yeah.
Mm-hmm.
Great.
Thank you. Really helpful.
Thanks.
Last chance. Okay. I think Katie, it's you're up, aren't you?
Yes, I am up. Okay, thank you so much, Kayla. Thank you, Julia. Really valuable session. I'm making notes of questions and also going to be sharing the resources. You already have access to Kayla's deck, and I want to reiterate that you have full access to Kayla's contact information, and you can book really simply through a link to schedule any follow-up calls as well with her colleagues. I also wanted to highlight that Kayla is going to be joining us in December with another colleague to talk about Shred as well. So that's after boot camp. It's going to be optional, but if it's relevant to you in your business, then make sure to sign up for that. You'll see more and more of those optional master classes or lunch and learns that will come through your inboxes, and then really that's up to you, but those resources are available. So yeah, and thank you, Kayla. I'm going to cover off some to-dos with our founders. So if you wanted to hop off, you can. But again, we just really appreciate your time, and you're such a valuable partner of SheBoot. So thank you.
Thank you so much, Kayla. Yeah.
Thanks, everyone. It was nice to meet you, and hopefully I meet you in person in November.
Yes.
Bye.
Hey.
Yeah.
Oh, the perfect segue too. So I'm sharing the feedback form in the chat. Please link to it now. We really appreciate the feedback for both of the sessions today. I'm realizing it's 2.5 hour session or 2 hour session, but it's really valuable to get your input and your feedback, because that really informs the program as we move forward. Also, so I'll be sending that to your inbox. If you don't reply, you know, you'll receive that from me. You have been. Speaking of travel, so who here, show of hands, and for those who aren't on video, you can also share in the chat, who's already got ahead of the game and has booked their travel to Ottawa from November 11th to November 14th, 15th, or the 12th? Okay, nobody. That's all right. I figured, but I'm going to be resending the travel instruction document. It's a quick and easy link. I'll actually pop it in the chat now too. not only does this document have, really outline the grand finale and SAS North, you'll get more information as time goes on, but it has at the very top, it has actions required. So I've put in a little box the 4 things you've got to get done before you get here, and that's booking your travel, being ready to submit for reimbursement, and then also to be able to book your hotel and then sign up for the events, both the SAS North, and then also we have another event for you to join, a networking special invite event for you to join too. So the instructions are there. They're really just basic registration, and then of course book your own travel for reimbursement. And I'm going to share in the link to our advisor and investor workshop lead document. Because I've referenced that 100 times today, and of course we'll send a follow-up email, but I've referenced that many times today. So it's a really reminder that you have access to Melanie. You have, in addition to your financial and legal advisors, you can meet with Kayla. You have access to Melanie, Nadine as well, and a few others who can who really have expertise in other areas that our founders have flagged you need support in. So they're there for you to reference and to book with. And with that, I'm also going to ask Julia. Julia, do you want to chat a little bit about the session on Thursday, just so everybody knows what to expect and also can get ready to be active and involved?
Yeah, absolutely. And I just put the glossary in the link again, just so you can find it. It is in the founder share, but I challenge you to find words that are not on the glossary list already. Okay, so I haven't figured out, what sort of credit you get for that, but acclaim is definitely one of those. Okay, it'll help it make stronger for future founders. On Thursday, we've got a wonderful opportunity to sort of practice some of those questions you're going to be asked either after your pitch, maybe during your deep dive with founders, or questions you might be asked about your data room. We've got Jennifer Francis joining us from Capital Angel Network. We have Chelsea joining us from the 51, and they've seen tons of founders, and we're trying to make sure that this pitch practice is great. I mean, and getting your pitch right, but answering questions is an important part of that, and the deep dive process gets essentially that deeper and deeper, and the questions get more difficult. So we're just trying to do some practice time and bring everybody together for that practice and test it out on each other a little bit. So much more focus on the interactive for Thursday, but we'll love to have you there, and we'll break out into little breakout rooms, one with Chelsea, one with Jennifer, one with myself, and see how it goes. Okay.
Awesome. Thank you so much, Julia. Does anyone have questions about that session? Yeah. And if there's anything in advance of that session, maybe you're noticing trends or you've dealt with some difficult questions, think about those as well. And don't be afraid to ask. Or if there has been a question that's come up and you've faced that challenge on the spot, or you've been to a pitch event or you've interacted with founders and you're trying to look for ways to navigate, you can bring that forward too, because you have 3 fantastic experts right there available to help you managing that process or that experience.
Thank you, Cheryl. I'm not as good at the lingo in BC, so that's
yeah.
Yeah. Mm-hmm.
Yeah, that's great. And we're national program, so we've grown, and so we've got learning to do with what's happening across the country. So feel free, like Cheryl, send your suggestions and we'll add it.
Does everybody know what an accredited investor is and what they have to do to be an accredited investor? Okay, I get mainly shaking heads. And the weird one is in BC, there are non-accredited investors, which is nice. It's nice. It'd be nice to see some more of that in Ontario as well too. But just a quick one: accredited investor has to have a certain amount of property value and or salary. And it's 5 million total, 1 million without any household assets, cars, etc., or a salary, combined salary for a couple of 300,000 a year. You self-declare. There isn't anything beyond just self-declaring, yes, I meet that criteria, and that's it. You're an accredited investor in Ontario and probably most of the other provinces.
Okay, great. Anything else, folks? You're a little more quiet today. We'll get the energy back up for Thursday.
It's the daunting task of knowing that we've still all got to go and do our data rooms.
I know. But the good benefit.
Manageable at the beginning, and now it's like, oh.
Oh, I'm so glad you shared that, because you're not alone in feeling that. I'm positive.
I thought it was being organized, yeah.
Yeah, and I will say, so you know, next week we have, I believe it's next week. Am I going crazy? Yes, next week is already, yes. Oh my gosh, that's so nuts. I can't believe we're already in October. The time is flying. But next week, you do have a break from the workshop. So you'll have those, you know, take full advantage of those 4 days, and the only additional thing you'll have is the pitch practice, of course. And if anyone has any questions about pitch practice, I'll just reiterate, the folks who are joining us for pitch practice, these folks, we want to absolutely respect their time and want to make sure that we show up on time, that we're, you know, really conscious of working to not cancel last minute or make those adjustments, because we want to just be aware that these folks are really adding so much value to our program, and especially for those pitch practices, we want to be conscious of how we're representing the program to these these VCs and angel investors. And so I just wanted to make that statement. But we're really excited and they're going really well. And if you have any questions or concerns about those, please reach out to me too. And with that, you get extra time back again.
Yeah.
Woo. Okay, wonderful. Thank you all so much.
Thank you.
Have a great day.
Bye.